Welcome. You've tuned into ET Now, and this is Buy Now, Sell Now with me, Varun Hirimat, and along with me, Karunya Rao. Let's take a look at the markets. We are 93 points up on the Nifty, nearly 0.7%, 13,694. Midcap index just turned positive as we speak. Auto index is up 0.7%. The banking index outshining today, up 1.5%. So that's really encouraging market breadth as well. 32 advances versus 18 declines. IT taking a bit of a backseat today. Wipro, Infosys, your top losers. You also have TechM featuring in there, 0.6% down. You then have Nestle and Adani Ports facing some pressure today. On the winning side, you have an Axis Bank. You have two crude stocks, ONGC and IOC, and then two auto stocks, Bajaj Auto and then Tata Motors, both making a strong comeback. Those two are up nearly 3%. So we pretty much have regained all the lost ground that we lost earlier in the week when we, of course, had that drastic fall. We seem to be regaining confidence. We've ebbed off a little bit from the morning high, but still, I'd say we're firmly in the green, Karunya.
Well, we definitely have gained the lost ground, significantly so from the Monday's lows. Santa rally definitely is something that's aiding the markets in a big way. But let's also understand what are the stocks to watch and keep on your radar as part of our BNS and Stock Cloud. Let's pull up the names that you should keep on your watch list today, starting with an ACC as well as Ambuja Cement. Two stocks definitely which are flying in trade. You have some good news coming in as the technical know-how fees has renewed and capped at 1% of the total revenues. In fact, brokerages are saying that it is a big relief as far as the royalty status quo is concerned. Existing charge of 1% of net revenues continues. Investor concerns on the possibility of a hike have been abated. Moving on then to Vedanta, big developments coming in there as well. Promoter has launched an offer to buy up to 18.5 crore shares of Vedanta. The offer size is about 5% of the total equity, and the indicative offer price range is between 150.5 to 160 rupees a piece. JP Morgan is the banker to the deal. You also have some telecom data trickling in, and that's something that's keeping stocks like a Bharti Airtel a buzz in trade. Indian mobile subscribers have risen about 0.3% on a sequential basis at 1.15 billion as of 31st of October. Bharti Airtel adds about 3.7 million mobile customers in October, while Jio adds 2.2 million. You have a Tata Communications as well. That's very much the cynosure of all eyes. They've bought about 58% stake in a company called Oasis Smart SIM. You also have 3i Infotech, a very less talked about IT or software firm, which is the cynosure of all eyes today. Why that is? Because big private equity firms like Apex Partners, Blackstone, they are in race for a controlling stake in the company. You also have a Sun TV reacting quite positively after the government yesterday announced allowing 100% FDI in DTH operators. Mrs. Bector's, of course, a big and important name to watch out for. They've made a stellar debut on the Lal Street. The stock is up 15% as we speak. Finally, some optimistic brokerage note coming in on MCX. Morgan Stanley has maintained overweight. Target that they've given is 2,000 rupees a piece, and they also have flagged off that they expect the volumes to continue improving further from current levels. So there you have it, the Buy Now, Sell Now Stock Cloud with all the stocks you need to watch out for.
Okay, thanks for that, Karunya. Let's now talk to our guests. They're ready. Kunal and Ashish are both with us. Good morning. Thanks for taking up the time, as always. Kunal, coming to you first. We have the bulls firmly in control today. We have now recovered most of the losses that we experienced early on this week. What's looking exciting to you? And what's your high-risk and low-risk call for our viewers today?
So good morning, Varun. Good morning, Karunya. Yeah, I think the recovery in the last 2 days have been quite spectacular for the index. We've recovered more than 600 points on the Nifty, almost 1,000 to 1,200 points on the Bank Nifty as well. So it's a remarkable recovery for both these indices. But just one important technical observation which just cropped up on my charts was that the Bank Nifty has come back to some sort of a resistance zone at 30,400 levels. It's a dual resistance. One on the indicator front that's falling a band, and the other is on the 76.4%. It's a Fibonacci retracement number. So these are very important technical tools to watch out for, and generally indicates that maybe you might see some trimming off of gains from the top. So today's high, that's 30,400, 500 approximately, should now act as a resistance, and a new wave of rally could begin if we break past about this level. Now, I would expect that the stock-specific action would continue to remain robust, like what we've been accustomed to in the last couple of days at least. So I would continue to suggest a couple of buy calls. First one is a buy on ICICI Lombard. I think it's a stock which has formed a classical bullish flag pattern on the daily charts. It's been consolidating since last 3 weeks. Going through a sideways range, trying to, the indicators are trying to go back to some sort of a mean reversion. And I believe once the bullish flag pattern breaks out, you should see a renewed vigor and a momentum coming back into this stock. So would be extremely bullish on ICICI Lombard at current levels. Targets could be kept at approximately 1150 mark, stop loss at 1050 zone. And ICICI Bank in the same light, I think has given a breakout yet again about that 510 zone. Short-term breakout for ICICI Bank, expecting another 4 to 5% on the upside. So watch out for targets of approximately 530 on ICICI Bank, and stop loss could be kept at 504.
All right, so two names from the house of ICICI, which Kunal seems to be recommending from a high and low risk standpoint. Ashish, morning. What are your recommendations from a fundamental standpoint for our viewers?
Yes, couple of ideas I like to share with your viewers. First is IFB Industries. In my view, though stock is near 52-week high, but looking the way we have seen rally in Dixon Technologies, Whirlpool, etc., I think this stock will continue to do well. So my 6-month target for this stock is again 1500. Again, the positives are, if we see their last quarterly numbers from the losses in September 19, they made almost 31 crore PAT in September quarter, which gives the kind of indication, the demand which is picking up in the white goods sector per se. Besides this company is into auto ancillary business also. So white goods as well as auto ancillary, both are winning combo, which Street is liking. So this is a stock to watch. Even at this price, I'll suggest to buy IFB Industries. Another stock which is a low risk idea is Kajaria Ceramics. This is a company which is the largest manufacturer of ceramic tiles in India. And like in last quarterly numbers were quite robust, where we have seen margins are improving, free cash flows are again almost at all-time high. And if we see September 19 numbers to September 20 numbers, they have picked up in sales as well as profits are almost at par level. And the kind of activity that we have seen in allied activities in real estate sector, we talk about Asian Paints or all the paints stock, etc., cement stock, etc. I think ceramics stock have still a lot more to go from here. So my 6-month target for this stock will be 850.
Thanks for that, Ashish. Kunal, let's bring you on board. I believe you have an interesting analysis on Nifty's performance versus the Nifty Bank. So what would you like to flag off for our viewers today?
Because this correction which we've seen, 800 points, 700 points on the Nifty, and then a rally which has ensued, and I think almost a 2,000 point correction on the Bank Nifty, and then a rally of almost 1,200 points. Now these are falling into classical, technical characteristics. So what I've mapped up the intraday charts for both of these indices. On the left hand side is the Nifty, on the right hand side is the Bank Nifty, and what I've done is a simple retracement analysis. So from the high to the lows, how much has the indices rallied up higher, and which is a leading indicator, which is an underperforming index. So just a simple comparison between both these indices indicate that the Nifty has come back to 76.4% retracement till yesterday's closing. Today it's almost retraced 100% of the entire fall. Bank Nifty till yesterday had retraced only 50%, and as we speak it's come back to 76.4% retracement of the entire fall. Now this indicates that Bank Nifty has been an underperforming sector in this recovery or in this rally phase, and I think if there is any kind of a catch up which has to happen, then the Bank Nifty could probably stand to outperform from here on. So short-term chart indicates that the Bank Nifty has been an underperformer with respect to the Nifty retracement. But if there is a catch-up, then the catch-up could be more vicious in the banking index. So which is why I believe that as a shorter-term trader, this is a very important observation to watch out for, comparing the Nifty versus the Bank Nifty trends.
All right, that's an interesting analysis, Kunal. Thanks for that. Request you both, Kunal as well as Ashish, to stay on with us. We're slipping into a break here. When we come back, we will address our viewer queries on the other side.
Hi, welcome back to ET Now. You're watching Buy Now, Sell Now. Let's now address the viewer queries, which is the core of our show. We have Puneet the Gamer, that's his Twitter handle. He's bought 2,000 shares of TD Power Systems at 97 rupees per share, a stock we don't talk about too often. His time horizon is 2 years. Should I hold or book out? Kunal, TD Power Systems, could you offer any technical insights for Puneet?
I was looking at the charts. Again, a stock which I don't track, that often, and of course we don't discuss also that often because of a couple of reasons why. One of them is the extremely thin nature of volumes. I think that's the bigger concern for the stock price. The average volumes, just a couple of months back was just about 5,000 to 6,000 shares. Today, I think it's a slight bit higher, but I think the average volumes are far more lower. As it is about the stock price trend, it's not been a stock which has gone through a full throttle recovery. I think from the March lows, the stock has given returns of 50-55%, which is more or less in line with the overall or the average market as such. So it's not been a big outperformer in the mid-cap name. So I for one believe that if you're holding the stock and if you're already making money, then I think it's time to book out profits over here. If you're looking at something from the power space, then I would recommend Tata Power as a stock which I think can give you a very strong upside from a medium-term perspective. So would suggest a shift from current stock of TD Power System to Tata Power.
Ashish, do you concur with Kunal's view?
Actually, I'll recommend to hold this stock. Let's look at the fundamentals of this company. They are the one into very niche business. That is, they make AC generators, which are used in all sort of power generating companies. So it's a wind power or solar or thermal. Their products are going to be there. So they are number one in India as far as AC power generators are concerned. And if we see their profitability in September quarter, they did almost 18 crore kind of profit. Book value is also 160 rupees. So my suggestion will be to remain invested in the stock. In one year time frame, I'm expecting this stock may touch even 200 rupees. So my advice is to remain invested.
Okay, well, there you go. That's the verdict coming in on TD Power. Moving on to next query. This is from Bhaskar Raju. He has actually wanting to ask about two different stocks, so we'll address them one by one. Let's first talk about his first query. He's bought PNB at 35.8 rupees a piece, almost 36 bucks. I think he's talking about the futures, if I'm not wrong. Kunal, what would be your view? No, he's talking about the banking stock only, not the futures, but he's bought it at 36 rupees, close to that amount. He is asking if he should stay invested. What is the chart looking like and how are the prospects going forward?
So I think it's looking quite okay. The stock, at least in the near term, the rally which has shaped up for PNB from 23, 25 or 26 levels approximately to a 40, 42, which it tested. I think it's been a very good and a very strong kind of a rally, more than 60 to 70% kind of a gain in a matter of 1.5 odd month. And these stocks have typical inherent very high beta nature and behavior. So you will see these stocks going into swifter and faster uptrend. And at the same time, whenever there is any sign of a correction, the correction is very sharp and very steep. So I think it's moving with a typical sense of nature of how the inherent stock price characteristics are. At 32 levels right now for PNB, it's come back to support of two important moving averages. The 200-day moving average, which I believe is a very, very important average to take note of, and the second is the 50-day moving average. Again, a very good indicator to look at from a short-term angle. Now, the fact that the stock is at 32, it's combined and coincide with both the support levels. I, for one, believe that that's a strong indication that the stock could restart a rally from here, from current levels. So, since you bought at very recent prices of 36, I would suggest a hold, and if you can, then you could look to average at current levels as well.
Okay. Ashish, what about you? Recommend buying PNB, or can you look at maybe the private banks instead?
Yes, actually, I'm not very big fan of PSU banking stock because after having such high NPAs, like this, the bank which is almost having 13% book is still NPA going on. There's a lot of inertia in the PSU banking space as far as new lending is concerned. So last few quarters they made good treasury profits, etc. But unless you concentrate more on your core lending business, it will be difficult to maintain profitability. Even we saw their QIP was almost 50% only subscribed. So it shows that still appetite is not there among even institutional investors to grab any PSU banking stocks in spite of the fact that they are near 52-week lows. So my suggestion will be to exit from PNB and look at Steel Authority of India, because in this particular quarter we are expecting bumper result from all steel companies. So you can though buy half of Steel Authority of India, but in 6 months' time, you may even see 80 rupees in Steel Authority of India. So my advice will be to exit from PNB.
Okay, Ashish, quite clear-cut advice from you. Let's move on. Our next query is again for a PSU bank, IDBI Bank. And he's bought it again at 38 rupees per share. This is the same person, Bhaskar Raju. So he's clearly of the view. See, there's two views in the market, right? Kunal, I want to ask you. You look at Kotak Bank at 1950 today, which has moved from 1500, I think, in a month and a half. You look at HDFC, and it causes you concern of these super high valuations. So you try and buy these beaten down banks. Is that really a good way to think? Will the expensive just get more expensive, or is there actually a case for catch up here?
So I think it's a very, very valid question, Varun. So when you're looking at, when anyone is looking at buying these stocks, one has to understand that there is, one very important criteria that, you need to have first a large cap names as part of your portfolio. So yes, these large cap names would not be available at cheap prices for a long period of time, because the markets will always find safety and cushion into these kind of names. So it's bound to be that you will see names like HDFC Bank, Kotak Bank, maybe even an ICICI Bank at rich kind of valuations, talking about slight bit of fundamentals there. So and that's why I think that traders think and believe that buying these PSU banks could probably be a cheaper bet, because these are available at far lower prices. But then I think an ideal portfolio, even from a trading aspect, should probably be more skewed towards the private sector banks, and you may probably opt for some of the PSU names just so that you can probably get a little bit more alpha towards your portfolio, because these stocks will tend to give you higher returns in a shorter degree of time frame. So I think that should be an ideal mix towards a portfolio. Talking about IDBI Bank, particularly, yes, I think the stock has also managed to see I would say a decent rally in the last 1.5 odd months from those lows of more than 35 to 40 levels. It climbed up to almost 80 till a couple of months back, and now come back to a support territory. So I believe that you can look at such kind of names, but I think it's better that you start getting invested into the private sector banks. If you're already loaded there, then I think it's a separate case that you can look at staying invested in names like PNB and IDBI Bank.
Right, thanks for that. Ashish, what's your view here on IDBI Bank?
See, issue is right now, whatever buying that we are seeing in the financial services sector, it is mostly by the FIIs only. So FIIs are typically having more preference towards buying some bigger names. That is why you are seeing Kotak Bank or Axis or ICICI or Bandhan, etc. moving much better than compared to these PSU banks. So even if you see the portfolios of domestic mutual fund sector, you will find mostly those names only in their portfolio. So typically these banks are being bought more by retail investors. So yeah, there's no harm in buying these banks, but problem is that the wait for the kind of returns other stocks can give, it may be much longer with PSU banks. This is the reason I'm not very bullish on PSU banking stocks, even at this prices. So even my same opinion is for IDBI Bank. Again, QIP came, not very good response even for IDBI Bank also. So my suggestion will be again to look at more steel stocks or like JSW Steel or Vedanta, etc., where you can get better returns in a shorter time frame instead of PSU Bank.
All right, well, that's the verdict coming in then on both PNB and IDBI Bank. Moving on to our fourth query, Hari Bala writes to us from Mumbai. He wants to invest in small cap IT firms as well, like Intellect Design perhaps is something that he is looking at right now because it seems to be on a new growth strategy. He wants to understand if Intellect Design perhaps is a good candidate to enter at the current market price. Kunal, coming first to you on Intellect Design, how do you see the chart for this one? And of course, from here on, we've seen a good growth coming in for several of these IT stocks, whether they're large cap, mid cap, or small cap in various pockets. But for Intellect Design specifically, which way do you see it go from the current levels of about 305-6 odd rupees?
So yes, Karnya, we've seen the large cap and the mid cap end of the market doing extremely well for the Nifty IT index, and which is why there's a lot of comfort. Now these small cap index stocks, small cap stocks, they tend to bloom and blossom when there is buoyancy in the large cap names and especially the tier to large cap names as well in that aspect. So because of the fact that stocks like TCS, Infosys, Wipro, and the mid cap rung like Mindtree, Coforge, etc., they're doing extremely well, which is why you'll have a lot of confidence in coming into these names. Again, I think the idea over here is that if it's specific towards just one particular stock, and if you already have investments in other large cap names, then I think it's a good mix. Talking about Intellect Design particularly, there's a big breakout which has happened about the 270 level for Intellect Design. I think the stock had broken out of almost a 3-year of resistance. 2017 or 2016 end is where the stock had taken resistances. That was a multiple resistance for Intellect Design, and I think this month you've seen a breakout coming out of that 270 275 hurdle. So keeping that as a floor or as a support, I think the viewer over here can probably look at building on his investments on Intellect Design. I'm expecting that if the stock holds on to this 270 275 support for some more time, then it could try and propel up higher from current levels as well.
Okay, thanks for that, Kunal. So cautiously optimistic. Ashish, coming to you, if you just look at Intellect's last couple quarter performances, there's been a sharp upgrade in the most recent quarter. And then if you normalize that going forward, your PE ratio is still quite low compared to some of these other mid-cap IT stocks. So do you have a view here?
Yeah, if you see even the stock per se from low of 45 rupees, it has touched a high of 330. So this is typical one good example of how things are taking change in BFSI sector, because their products are highly concentrated towards BFSI sector, and the way digitalization is taking shape in this sector, I think this is the company which can take really full benefit of that particular drive. Even last 2 quarters were really good, and I'm expecting even this quarter is going to be very good in line with other IT sector stocks. So my suggestion will be to buy this stock in some correction because we have seen good run up in this stock. So 280-85 will be good level to buy this stock, but in 6 months time, you may see 400 levels also in Intellect Design. I'm quite bullish as far as prospects are concerned of this company.
Great. So I think both of our experts are giving it a thumbs up. So keep your eye out on that one. It's been on quite a tear lately. We then have the next query from this morning's listing, Ashit Patel of Mumbai. Can one invest in Mrs. Bector's food on listing? So obviously now it's up 15%. It's close to 575, I think. Kunal, coming back to you, very expensive stock. Can you view it in the same light as an FMCG company? Does it deserve that multiple? And I know obviously there's no technical data, it's just listed today, but what are your thoughts on this one?
The past one, because the stock has just recently listed and it's completely impossible to try and fathom out the trends for the stock. So we need at least a couple of months of data, at least to try and gauge the short-term direction. So I'll give it a pass.
Okay. And Ashish, what is your sense on Mrs. Bector's? I mean, yes, the stock has run up a fair bit on the listing day itself, but is it a good idea to dip in or to buy into this at the current juncture? Is there more potential for growth from here on? What is your understanding of the company?
In my view, at 3,300 crore market cap, it is fully priced. You can't expect what happened in a Burger King IPO. It's same thing in all food companies. So my suggestion will be not to buy at this price, this particular company, because there's demand and supply mismatch, because nobody got the shares and you were having some memories of Burger King IPO super run up. So I don't think so this is going to be case with this company. At this market cap, it's fully priced. My suggestion will be to book profit. If you have got allotment of this share, you will surely get the stock at lower price in future.
Okay, Ashish and Kunal, thank you so much for joining us this morning and helping us out with a host of viewer queries and sharing your tips with us as well. Slipping into a break here, more market-related updates and insights on the other side. Stay tuned.
Back to Buy Now, Sell Now. And on to an ET Now exclusive. An inter-ministerial meeting held last week has prepared the strategy plan for the new national logistics policy. Sources have told ET Now that senior government officials from the Commerce and Aviation Ministry have met to include COVID-19 vaccine storage incentives under the new logistics policy. The government plans to roll out the new policy in January and aims to bring down logistics cost by 5% for players. Let's go across to my colleague Karishma now for a detailed review of what exactly is being planned. Over to you, Karishma.
Well, right, it's the much-awaited national logistics policy that has been under the works for almost a year now. But finally, news coming in last week, senior government officials from Commerce and Aviation Ministry met and decided on coming out with a strategy plan. Two important things that they're considering is certain tax incentives for logistics company because of the need of the hour, that is COVID-19 vaccine distribution and transportation. Second, of course, the government is aiming to cut down the logistics cost by 5%, and all of this is going to be included in the national logistics policy. I'm being told that it is going to be in the end of January or, of course, on the day of budget that the policy will be released and will also cater to a digitized format of working. The government also plans to, of course, set up a digital inventory of logistics assets, and also a unique account number will be given to companies for easy tracking.
All right, Karishma, thanks much for joining us with that ET Now exclusive. Moving right on to some more ongoing developments, the DHFL COC, which is Committee of Creditors, is going to be meeting today. ET Now learns from sources that the COC is likely to begin voting on the resolution process after further evaluating the bids. In the run-up to this meeting, Piramal Group Chairman Ajay Piramal had written to the DHFL Administrator. Oaktree Capital also wrote to the COC. Priyanka has more details. Let's bring her on board.
Whereas the Committee of Creditors of DHFL is set to meet today, and we understand that after further evaluation of the bids, it is likely that the COC may put up the resolution plans for voting, after which there will be a 15-day voting window, and we will get to know only after those 15 days at which resolution plan has received the most number of votes. The evaluation of the bids will be, of course, based on the further clarifications that were provided by the resolution applicants on 21st of December. But remember, in this run-up to this meeting, The tussle between the top two bidders has continued. Piramal Group Chairman Ajay Piramal had written to the committee, to the DHFL administrator, saying that their bid is better in terms of value maximization, while Oaktree's bid does not meet the tests of feasibility, viability, unconditionality, and is also not implementable. In fact, he had also said that if we adjust the 1,500 crore escrow amount that Oaktree Capital has suggested to keep aside as part of the plan, then Piramal's bid is higher by 2,500 crores. But in response to this, Oaktree Capital has also written to the Committee of Creditors saying that Oaktree has been the subject of a sustained campaign to undermine their bid, and they're saying that any suggestion that Oaktree's bid is conditional is incorrect and is designed to mislead. Apart from that, Oaktree Capital has also said to the COC that they would not have been invited to bid in the first place if their bid is not implementable because of the issues that may arise because they are a foreign player in terms of the insurance business. And they've also said that foreign investors do not expect to be invited to bid and then be discriminated against because they are not a domestic player. And the resolution process has been opaque and with shifting parameters. So we'll have to see whether after further evaluation, the bids are put up for vote. We know that Oaktree Capital's bid stands at 36,640 crores, while Piramal Enterprises' bid stands at 35,500 crores.
Okay, thanks for that, Priyanka. Let's now switch gears a little bit back to IPO Street. The Bector listing, of course, is the main event of today. 600 rupees seems to have been the high, and from then it's sold off. We're currently sitting at 570. Now let's remember the issue price was 288, so we've doubled from the issue price. Issue price was a 55 times earnings multiple for this company. So today at 3,300 crore market cap, the multiple is on par with some of the leading FMCG companies in the country, right? So, of course, they do biscuits, and that's 50% of the business. They have some contract manufacturing for Mondelez. They also have institutional bakery. They also have private label. So, it's a diverse business that goes towards QSR and then goes towards FMCG. They have a bun monopoly, so they manufacture for KFC, McDonald's, Burger King, Pizza Hut, Carl's Jr. They're a preferred supplier there. So the call investors need to take is whether this can get the same multiple as some of these QSR companies or whether it could get the same response as a Burger King. It seems that the response has been very good by the issue price, but a lot of investors have also flagged off their concerns because the company has not grown so well. So 700 crore revenue was in 2018. Today we're still at 762. In FY21, maybe we'll get to 800 based on the current run rate. So growth has not been as quick as some would believe is required for such a high multiple. But then again, it has great customers and long-lasting relationships with some of the leading players in their segments. So we also caught up with the management, which you'll be hearing more from later, but keep your eyes out on this one. Ebbed off from the high of the day, but once again, a tremendous listing response. And also, talking of the fact that this company is in the FMCG sector partially with its biscuits business, we actually caught up with Ayaz Motiwala to get his review on the FMCG sector, where it currently stands and what the outlook is going forward. Let's listen in.
Yeah, so we own the three names which are sort of Marico, Britannia, and ITC in our PMS portfolio, which we run under QRC in India. And so those we are very bullish on. We think for different reasons, each of these securities are hopefully going to surprise on earnings, whether it's new product initiatives in case of Marico or sort of continued momentum of consumption in the case of Britannia, or the under appreciation of the consumer business that ITC has built out as sort of headline thoughts on it. So we think these are the three sort of large cap stocks we think which are very interesting. They are large in sort of size, but they should have the kind of returns that you talk about, mid-teens to even higher over the next 2 to 3 years. This is despite the current starting valuations very clearly that we are aware of.
A break here, returning soon with more updates on the other side. Welcome back. You're still watching Buy Now, Sell Now. It's time to unveil our quiz answer for the day. We asked you this morning, which sugar company commands the highest valuation in terms of PE valuations? The options were EIT Parry, Dhampur Sugar, Dwarikesh Sugar and Balrampur Chini. The correct answer to this question is option A, which is EIT Parry. We have 3 winners, 3 quiz champions: Piyush Bhargav, Suresh Pagaria and Narayan Rajaram. Thank you so much and congratulations for our winners for getting it right, and thanks to all of those viewers and followers on Twitter who've been participating.
Right, a hearty congratulations to all of you who got that quiz answer correct. But switching gears to the startup ecosystem, as we wrap 2020, let's take a look at how the year has been for the startup ecosystem, which companies turned into unicorns this year, and who invested the most where. Here's a special report.
The COVID shock of March devastated most industries, and the startup ecosystem was no exception. Sequoia issued its famous memo calling coronavirus the black swan of 2020, and NASSCOM said 40% of Indian tech startups were forced to halt operations. But investments in startups have shown resilience and recovered as India saw a rapid shift to digital services and payments. However, the jury is still out on whether Jio Platforms' fundraising avalanche crowded out funds for the rest of the ecosystem, or if it will lead to newer investors looking at Indian startups. According to data from Venture Intelligence, startups in India raised $10.6 billion across 648 deals in 2020, the lowest in 4 years, in terms of the value and volume of deals. While the amount raised by startups is lower, the year also saw the emergence of 10 unicorns. Startups that raised top dollar include Zomato, Byju's, Oyo, Ecom Express, Dream11, Cars24 and Zenoti. Bengaluru-based startups clocked the highest number of deals in terms of volume, followed by NCR, Delhi, Mumbai, Chennai, Pune, Hyderabad and Ahmedabad. In terms of investments, the sectors that raised the most funds in terms of value included e-commerce, education, logistics, food, fintech, real estate and healthcare. Some of the most active VC investors in terms of the volume of deals include Sequoia, followed by Axel, Matrix, Chirate, Lightspeed, Elevation Capital and Nexus Venture Partners. In all, 2020 saw 10 unicorns, the first being Pine Labs and the last being Daily Hunt. With restrictions placed by the government on funds coming from China and the Mauritius route, options are becoming narrower for startups as they seek follow-on rounds of funding. Will we see more strategic capital coming in from the likes of Google, Reliance and Tata Group as they seek a bigger pie of the startup ecosystem? Chandra Ashrikant, ET Now.
And on that note, we're wrapping it up right here on Buy Now, Sell Now. It's a goodbye from Varun and I. We wish you a Merry Christmas in advance from everybody at ET Now.